Everyone, welcome. You are watching News 9 Live and we are bringing you Budget Day coverage of Budget 2024 all day here. We've been bringing you the ball-by-ball update when we continue to break down and decode the budget and what's in it for you. I am Krishnakumar.
I am Shweta, Kothari, and we are of course bringing you all the highlights of the Budget 2024. Remember, it was presented at about 11 o'clock this morning by Finance Minister Nirmala Sitharaman. And this year's budget particularly focused on 9 priority sectors, and these are of course our priority areas that the government identified. Let's quickly run our viewers through some of them, if not all of them. One of course being agriculture, the other being employment and skilling, inclusive human resource development, manufacturing and services, urban development, energy security, infrastructure, innovation, research and development, and finally the next generation reforms. Krishna.
That's right. The 9 priorities outlined by Finance Minister Nirmala Sitharaman in her record 7th budget presentation. Let's go to some of the guests lined up for us on the show and get their reactions on them. To start with, we have Mr. Mohandas Pai, Chairman, Aarin Capital joining us. We also have Mr. Holland, CEO, Avendus Capital. We also have Riaz Thingna, partner, Thornton, joining us on this broadcast as well. Thank you all of you for taking time out to be with us. I want to begin with Mr. Mohandas Pai. Mr. Mohandas Pai, simple, straightforward question to you. On a scale of 1 to 10, where and how would you rate this budget and what exactly stood out for you?
What stood out for me was the focus on job creation. The biggest challenge for India is job creation. Every year we get 1.5 to 2 crore young people coming into the job market. We have to create high quality jobs. We are creating jobs, but then don't pay very well. And the focus on job creation, internship, the focus on apprenticeship, investment, incentive for job creation, labor-intensive industries in manufacturing, etc. is fantastic. They're putting 2 lakh crores there for 4.1 crore jobs, which is very, very good. And the second thing is about agriculture and productivity. We have to increase the income of farmers. That will only come by productivity and greater quantum of market price being given to them using agri-techs. I think the focus is there for productivity, new seeds, etc. The third is about urbanization. I think, India lives in urban areas. India no longer lives in villages. When the 2024 census comes out, people will be shocked at the extent of urbanization. In the next Lok Sabha, there'll be more seat for urban areas and political power will shift. Today, we have 8 lakh crore of subsidies given to rural areas and poorer people at the state and the center. Urban areas don't get anything. Our lives are miserable in urban areas. Bad air, bad water, not enough sewage, bad traffic condition, public mobility is not there. 10 lakh crores, and that's very good. And there are other areas there, which I think is very, very good. The only thing that is lacking from whatever I wanted was the restraint on regulatory agencies, because we must ask them to be accountable, hold their feet to the fire to say that whenever you go raid somebody, file some cases, complete it within 3 years. I think it's very, very important to remove the fear in business.
All right, interesting point. Let me also quickly get in Andrew Holland in this conversation. Andrew, hi, good afternoon. Thank you for taking time out. Lots in the budget for markets as well, from STT to LTCG, STCG, lots of changes. How are markets reacting to it? They closed on a flattish negative note. How's the momentum going from here on?
So I think, long-term capital gain tax, I think anyway would be absorbed. But I think the market needs to think through the fact that the direction is now being told to you, not just for this year, but years ahead, that capital gains tax or these kind of taxes are going to move higher. I think the short-term capital gain tax and STT will have an impact on those kind of popular shares, whether in mid-cap, small-cap or PSU stocks. Which were a favourite with the retail investor, because this will obviously dampen those trades going forward and reduce liquidity. So that's the other factor. But I think that the biggest miss for me was anything to do with the banking sector. As we know, have been crying out in terms of getting deposit growth to rise, and there was nothing there for them. So NIMs are under pressure. That's going to continue to be a problem for them. So one of your big sector weightages is still under pressure.
Okay, let me take that question to Mohandas Pai as well. That debate around LTCG is raging on in social media, Mr. Mohandas Pai. Lot of questions surrounding it. No indexation benefits on any capital that you own, especially is meant to be detrimental when it comes to something like real estate. What are your views on that?
I think 12.5% for non-listed financial assets is very, very good. You see, earlier we had a discrimination in favor of listed assets, where the time for long term was 12 months and 10%. Unlisted was 2 years with 20% and indexation. If you look at many examples, barring a few like real estate held for 150, 200 years, I think it doesn't make sense, right, to have a higher tax on non-financial assets. I think that's very good. I just now saw somebody make a calculation for the last 15 years. If you look at indexation and look at the rate reduction is higher. The benefits are higher. It cleans up the entire system. Of course, the market is a bit upset about F&O taxes going up, about 20% for short-term capital gains. But I guess the idea is to bring the tax rate to very near levels for all kinds of income. And they increase the tax to 2.5% for listed companies. I think we should follow that. But the bigger benefit will come from unlisted stocks, because huge amount of risk capital has to go into startups, have to go into unlisted companies, which can later list. And that, I think, is a very big incentive. Overall is pretty well balanced.
Okay, well balanced. But is that something you also believe, Riaz? As far as more money in the hands of people is concerned, that is what the budget has delivered, even if it's a little amount, to the tune of about 17,500 rupees. There has been an increase in standard deduction from 50,000 to 75,000. There have been some readjusting or rationalization of tax slabs. Is this something that you were expecting, or were you hoping for more?
No, I'll just take on from that capital gains question that was raised before. The impact of this capital gains is going to be quite huge. While we don't recognize it, lack of indexation is going to have a massive impact on the capital gains tax, especially for assets which have been held for a long period of time. And, I think it also shows the government's direction towards taxing generational wealth at a larger level, because imagine assets which have been brought in from ancestral assets. Without indexation, it's going to be a massive tax impact. So yes, while on financial assets and investments, it may still be balanced, but I think on ancestral property, that is going to be quite big. Coming to the second part of your question, when you're talking about whether it met expectations, yes, in terms of personal income tax, I think it is balanced. That increase in standard deduction, adjustment of the tax rates, these are things which are important for individuals, and I think to that extent it is fine. But there have been many other changes in the corporate tax which we need to look at separately. We can list them down as we go along.
All right, we will try and understand them. I think I'll take this question to Girish, because I think it's pertinent to understand, losing indexation benefit, especially as my colleague pointed out, on real estate, is going to be a sort of a bummer for middle class. Girish, in your assessment, does it look like a move by the government to really tax you for generational property? Or is there more to it? Because I just want to understand the rationale behind increasing taxes on LTCG.
I wouldn't make sweeping conclusions like to tax generational wealth, because most of these generational wealth also have a very low cost of acquisition. And you substitute that from the value as of April 1, 2001. And from April 1, 2001, you index it. So it will really depend upon asset to asset, region to region. And we cannot say it will be worse off or better off unless you go through asset classes itself. But it's really very celebratory in terms of the startup world. Angel tax is abolished. And really, when the promoters are selling shares, now they'll have to pay tax only at 12.5%, promoters, investors, which is a very, very big benefit. For properties, you'll have to see property by property to see what it means. In many cases, still you'll be better off. In some cases, you may not, but it all depends upon the property and what the cost you're holding. So I wouldn't say it's an attempt to tax generational wealth judgmentally like this.
All right. Andrew Holland, let me come to you on that. Lots of chatter regarding this LTCG, long-term capital gains. It might sound good when it comes to one asset class, but not necessarily for other asset classes. But then the real estate stocks have been doing really well, especially in India over the last 3 to 6 months post-pandemic, so to speak. How do you view this question surrounding the lack of indexation benefits being made available to asset classes like real estate and the hike of the LTCG?
No, it's obviously a negative, but when I look at asset classes like that, I mean, it's not as though you're going to switch from equity, straight into a property, because that's a bigger ticket item. So I think you have to look at each asset class on its own. But I think it would be a negative for for real estate in general. Given what the new tax is. So in terms of the stock market, so for capital gains, I don't think 2.5%, from 10 to 12.5 is a real game changer in terms of your longer term view of the markets. I do think short term capital gains tax will have an impact on market liquidity, and that's something that the market might be overlooking at the moment. But I think the big message to me is that taxes are moving higher.
Okay, taxes are going to be higher. We have another special guest joining us now to weigh in on that. We have Nilesh Shah of Kotak AMC joining us. Nilesh, thank you so much for taking time out to be with us here on Budget Day here on News 9 Live. The uniformity in capital gains tax was something that the market was hoping for, and the Finance Minister did deliver on that front. But what exactly do you think is the rationale behind increasing LTCG by 2.5%? It will hurt the long-term investor and retail participation, which is only starting to pick up over the last couple of years.
So essentially, whether it's 10% or 12.5%, it remains concessional. It remains far lower than other level of taxes. And then maybe Finance Minister tried balancing by increasing exemption limit from 1 lakh to 1,25,000. At the end of the day, we will pay tax only on profit. And this budget has created a fantastic emphasis on fiscal prudence on one side, investment on the other side, and employment generation. This combination will create far more profit opportunity. And yes, to some extent, it will get dented by 2.5%, but focus on the profit opportunity, not on the increased taxation.
All right. So that's clearly a view coming in from Nilesh Shah. Let me take this back to Riaz. Riaz, barring real estate, do you think that as far as the rest of the asset classes are concerned, this hike in LTCG is fair and fair game, so to speak?
Yeah, I think in terms of financial assets, I don't think the differential of rate of 2.5% is bad. So I think it's quite balanced on that front. As I said earlier, I think the real impact only comes for very old assets and possibly ancestral assets, and that too more in the range of real estate, etc. But otherwise, I don't see a big impact of long-term capital gains. The 2.5% is not going to be material.
All right, Riaz, I think stay on with us. I also want to quickly understand from you, at 17,500, and that is the amount of saving that Finance Minister also talked about, a salaried employee will have now by the way of new income tax regime. The new income tax regime hasn't seen the kind of pickup that the government wanted it for the longest time. Do you think this will bring more people in the fold of new income tax regime? There is it's now been made sweeter, therefore a reason for people to opt for new income tax regime now.
So even otherwise, I think the new income tax regime has been gaining favor, and today at least a significant part, I think a majority of the individual assessees have opted for the new regime. And I think over a period of time, the government's resolve is to try and make sure that the new regime is the only regime. By and large, it has already become the default regime. So I think these things are anyway going to make it sweeter and better
Okay.
to continue with that. Yeah.
Okay, let me take that question to Mohandas Pai as well. Mr. Mohandas Pai, 17,500 rupees. That's what the individual taxpayer gets to save with the new rationalized new tax regime slabs. Do you think, with these kind of moves, and then Finance Minister also talking about the fact that 2 out of 3 people chose the new tax regime. Are we looking at a time very soon, possibly even by next budget, where the old tax regime will cease to exist?
Well, I think 17,500 after so many years is peanuts. It's very, very less. There should have been a minimum of 35 to 50,000 rupees by making the first slab 0 to 5 tax-free at least, to avoid filing returns for large number of people who file for very small amounts, because it's a hassle to file this kind of returns. And I think they should have opened up. They should have given some benefit to senior citizens too, who don't take advantage of any other tax breaks, because they have to pay heavily for medical insurance. You know that medical insurance costs 18% today. And many people have to take medical insurance because the failure of the government in providing public health to everybody of a reasonable quality. So I think it's too little. It is something they've given us a few crumbs. They should have given more. For example, the 17,000 costs some 30,000 crores or 25,000 crores. If you're taking it up to 50,000 rupees per head, it probably, without giving any tax back, by elongating the slabs, it could have possibly cost some 60, 70,000 crores. Is okay, because you look at the individual tax collection is going up in 22%. It's very, very high. And it's going up because more people are filing returns. And in 26A, all your income is captured. You can't hide income anymore. And more people are upset about that than anything else, right? So I think it's very little, because now for the next 3-4 years, they're not going to elongate the tax slab. So giving it here when the middle class is angry and upset that they're paying the majority of taxes, they're suffering high school fees for the children, high college fees for the children, high EMI, quality of life is down in cities because of traffic, lack of public transport. They should have done something. They wouldn't have lost too much of revenue. But anyway, I think we should ask them now, instead of this 5 slab, make it 3 and elongate it so the tax comes down. So I think it's halfway done. They should do more.
Okay, let's take that question to Nilesh. Nilesh, do you think, are you happy with that 17,500? And there was an expectation that perhaps benefits of ATC will also be made available in the new tax regime. In a sense, telling people to save more by the way of PPFs, by the way of insurance, but that hasn't really happened. What are you making of the change in the new tax regime?
There is always ye dil mange more. But at the end of the day, we have certain committed expenditure on interest payment, governance, defense, and so on and so forth. Today in India, the income tax payment starts well above national income. So there is a burden on well-to-do part of the society to compensate by way of higher taxes. Undoubtedly, honest taxpayers demand equitable distribution of taxation. At one point of time, Indian tax compliance was comparable to poor African countries. We have improved substantially, but the journey is not over. It should continue. Second, the need for investment undoubtedly is there, and tax incentives do influence investment decision. But many times what has happened in the past, we gave incentive for investment for long-term in fixed income like public provident fund, small savings, LIC, and so on and so forth. We need to give incentive for longer-term investment, which is equity, which generates real return. So my feeling is that overall this budget has moved in right direction. It has given something to everyone.
All right. Okay. The budget has given something to everyone, Krishna. That, of course, is the word coming in from Nilesh Shah right now. I want to go back to Mohandas Pai on the idea of job creation. Mr. Pai, it does look like out of the 9 key priority areas for the government, job creation is one of the key priorities, or at least for now in this budget, has been a top priority. There have been at least 5 schemes launched by the government, and including the scheme for first month wage to all people, creation of job in manufacturing, support to employers, skilling program and the internship program in top companies. It does look like job creation has been one of the concerns of this government, and it tried to cater to those concerns. Are you happy with these 5 schemes? Do you think they're all encompassing and will be able to lift people, lift the youth, give them some hope and perhaps some source of employment in future?
Well, what are the challenges about job creation? First, availability of jobs. EPFO shows that lots of jobs are available. It's not that jobs are not available, but people's aspiration for the job is much higher. People's skill for the job is much lower. And what this budget tries to do is to tackle the challenge of skills. By giving internships, by making sure that you pay for the employer's share, you're increasing formal job creation, incentivizing people to go in for more jobs in areas where there is labor available, for example, garments, etc., labor-intensive industries, where some kind of incentives are required. We see a lot of labor coming off the land in the north of India, in the 300 poorest districts, so it will help. All this goes to help. Jobs are created when the economy grows. Economy grows when the investments go up. That is happening. Now there's a shortage of qualified people for the jobs. They know, and more people are coming for job, but they're not qualified. You can hear the construction companies, you can hear the security agencies, you can hear many companies in the services area saying we're not getting in skilled people. But the internship, hopefully a part of the problem can be solved by incentivizing the EPFO payments. Another part of the problem can be solved by going to rural areas. Another problem can be solved. So I think it's a step in the right direction, because you can't boil the ocean and solve everything, but this will solve 50 to 60% of the problem. But the biggest will be to increase the rate of growth. We're already growing at 6 or 7%, maybe 8%. Can we grow better? Yes, we have to increase efficiency. Further, the government is reducing the fiscal deficit to 4.9%. Hopefully, interest rates will come down. Real interest rates are quite high in the economy because we believe that the CPI is based upon vegetable, onion, tomato prices, which is not correct. Core inflation is around 3%. So I think that will set right many things. Overall, I think the budget is very conducive for job creation, and the programs are quite encouraging, much better than what was earlier.
All right, very interesting point, brought to fore by Mr. Mohandas Pai, is that core inflation has been in fact more or less under 4%. It's the headline inflation which continues to be a pain point, Krishna, and headline inflation rightly so, because it accounts for the more volatile energy and food basket, which have been a point of concern for India, especially the food and vegetable and onion and tomato prices.
Food inflation is over 7%, 7.5%. It's incredible the rates at which food inflation has been rising. So you have the thali-nomics, the veg thali and non-veg thali, which are clear indicators of how expensive food is getting. And that has been a pain point when it comes to bringing down the overall inflation level. Bear in mind, the target is 4.5%, 4.5% is where the Reserve Bank of India would like to see inflation at if it were to start considering any kind of rate cuts, but we are only progressing towards that. We're still away from that, and food inflation is certainly spoiling the party, so to speak, even as other commodities continue to remain within range, Shweta.
Absolutely, and for that it does look like government is trying to build enough and more adequate agri-infrastructure in order to support those farmers who are not able to either furnish their produce in the market, make it available as soon as possible post-harvest season, or it gets spoiled in the process in supply chain because there are delays in supplies of those produce. So government has enough and more thrust on rural infrastructure, on agri sector, and something that we've discussed in fact over the course of last couple of hours since the budget was out and about.
Especially the rural infrastructure allocation, the overall rural infrastructure allocation, which has gone up from 1.65 lakh crore rupees to 2.66 lakh crore rupees. A big statement of intent over there when it comes to addressing rural and agricultural distress, Shweta.
All right, joining us on the show is Mr. Arvind Virmani. He's an economist, member Niti Aayog. Sir, thank you for taking time out. Thank you for speaking to News9. I want to understand from you, one of the big takeaways from the budget was, of course, that fiscal deficit target has now been reduced for financial year 24 to 4.9%. Is it optimistic or is it realistic?
Definitely realistic. I think all of you are aware of the fact that tax revenues have been higher than was predicted, and of course everybody also knows that the RBI subvention was increased, but the tax stuff will continue, because of the growth rate assumption is very conservative. Many people noted that the growth rate of 6.5 to 7% was on the lower side. The RBI has 7.2, even IMF has 6.8. My own forecast was 7% plus minus 0.5% and remains that. So I think it's quite realistic.
All right, realistic. And in fact, as you rightly pointed out, the economic survey predicts, of course, 6.5 to 7% growth rate. Many would say this is an underestimation because what RBI has said, what the government has said, what various global agencies have said, all of them are hoping for an upward of 7%. So 6.5 to 7% does look like it's a bit of an underestimation there.
Yeah, but it's not so that all the, as I said, the IMF estimate is only gone up to 6.8, but I'm sure in 3 to 4 months they'll all come to my 7%.
Okay.
But that's partly a joke.
So
anyway, yeah, I think it has been, it's conservative and I think it's deliberate and I think it's correct. It's better to be surprised on official numbers. You see, we can say anything, but a budget has to meet its target. So I have always said, in fact, when there was planning commission, I disagreed. I still remember, I forget which plan it was. Everybody said, let's raise it to 8%. I said, stick to 7%. So I believe it's better to be a little cautious when you're making the budget because otherwise you'll get some nasty inflation surprises.
Right. You're saying cautious. Some people may just say optimistic, but nonetheless cautious of the external factors that India cannot control. But I want to bring you back to the budget. There has been substantial allocation towards Bihar and Andhra Pradesh, and these, of course, are partners with the government at the center. Do you think it's a disproportionate allocation to the tune of about 41,000 crore rupees, 26,000 for Bihar, for road construction, 15,000 for Andhra, for capital redevelopment? Do these make economic sense to you, sir?
So let's start with the region, right, which is the poorest region of the country. It's basically what, in my time when I was not a member in the planning commission, we used to talk about the heartland and the eastern region. Okay, so that used to be Bihar, Chhattisgarh, Jharkhand, Madhya Pradesh, parts of Orissa, parts of Andhra and so on. So I think some parts of that and Bengal, by the way, I can tell you stories about that, but I won't because it's opposition. But anyway, so I think there is a rational reason for helping these states build infrastructure at least, which the government has been doing all over the country. So as far as so we have to look at the specific things. Tourism, government has been talking about for 10 years and so on. So I don't think there's anything there which is outside the broad program of the government. But yes, you can say that X state is getting more or less than Y state. I really do not have an answer to that because that's political. But if I was to give a political answer, I would say look back at governments, coalition governments, and see where they spend money, and you'll find very similar actions.
Okay, I want an economic answer, sir. I'm looking for an economic rationale and not a political.
I've given you. I've given you the economic answer first, and the politics was just one line, which was only partly politics.
All right. All right, I want to come to manufacturing right now. Now, there are of course some key areas in which India has emerged as a manufacturing hub and shown its prowess, and one of which is electronics and smartphone making to be particular. Now, budget has of course cut down basic customs duty on mobile phones, mobile phone PCBAs and mobile chargers to 15%. What sort of impact are we looking at on electronics exports of this cut in basic customs duty?
So, there's long experience from East Asia and Southeast Asia, which I studied 20, 30 years ago. If you're going to use industrial policy, you have to be very alert and it has to be selective and it has to be time bound. This is something I have said for I don't know how many decades, that protection should always be temporary, and the incentives should be very focused and small and for a specific duration, because that is what I learned from whether it was South Korea or Taiwan or anybody. So the key is to help companies come up to a certain threshold, and then they have to learn to compete. So any industry, the protection should be temporary and it must come down. So if you see these changes in that light, I think they are economically rational. I cannot comment on the specific all of them because I have not studied it, and that's the point about industrial policy. You have to be very careful. It is not some general theory. You have to look at each industry and see, okay, this part of the process will take 3 years, so we will protect for 3 years, this one we should do for 1 year, etc. Of course, there is a lack of information, so you have to watch it every time. So okay, the decision, I think, by and large is correct.
All right, Mr. Virmani, before I let you go, sir, one of the thrust areas of this government, of course, remains.
Did we get disconnected?
Sir, if you can hear me.
Hello?
Yes, sir, if you can hear me. Mr. Virmani, can you hear me? I think we seem to have lost Mr. Virmani, but you know, of course, talking about indirect taxes, let's also quickly get in Riaz back in this conversation. Riaz, you know, we were talking about, of course, trying to make India a manufacturing destination, manufacturing hub. There was a call to reduce customs duty, and that has come in by the way of a reduction in BCD for mobile phones, mobile phone PCBAs, for customs duty in 25 critical minerals, and so on and so forth. Are you happy with these deductions? Because there has to be some tweaking in indirect taxes as well.
So firstly, I'll just say that in terms of indirect taxes, as far as GST is concerned, it gets all the changes come through the GST Council, and whatever changes have come in just now are only implementation of what was decided at the last council meeting. As far as customs is concerned, I think it has been directional. I think we are making the changes towards Make in India. I think providing certain reductions in duties for mobile parts and things like that is definitely a step in the right direction. Whether it is enough is always a matter up for debate, but I think at least directionally these differences or customs duty changes are in line with the overall direction of the government, especially in this budget.
I don't think we have Mr. Vanvari right now.
Right,
but
we have Mr. Andrew Holland still with us. Andrew, thank you for waiting by so patiently. You know, you've heard all the chatter regarding this budget, but if I were to ask you, do you think the market got what they wanted from this budget? It's not been exactly a happy day of trading. Thankfully, it hasn't been extremely volatile as well. If you look at it, both the Sensex and the Nifty closing marginally flattish in the red, down about 1%. You know, was that something that you expected on a day like this? And where do you expect the markets to go from here? And more importantly, what sectors do you think will be the focus sectors as far as the markets are concerned from here on?
So from a macro viewpoint, the market got exactly what it wanted and a little bit more. So I think it should be very happy in that from a macro viewpoint. From a tax viewpoint, obviously disappointment. And now, you know, the dust will settle and we'll all go back to the fundamentals. And first quarter results, as I mentioned, have not been great. I don't see that as being a catalyst for the markets to move higher. And, you know, listen, we've moved up since April. The market's moved up 10%. Valuations are, stretched. Earnings forecasts are being reduced along with target prices. And one of your big sector, the banks, is going to be under pressure in terms of their NIMs being under pressure. So I'm not saying that we're going to, the market's going to fall sharply. I think we could drift from here because there's no immediate catalyst. I think the trade would probably obviously be, would be the flavor, and against that, obviously, you'd probably have. So a more defensive type of setup in terms of sector rotation, and I think banks and those stocks where you've had a lot of retail trading, like PSU stocks, and across the board, could see small and mid caps falling out of favour in the short term as well. So that's where I see the markets. So I see us drifting down. I think the risk is to the downside, not the upside.
Okay. Let's now then listen in to what former Finance Minister and Congress Party leader Mr. P. Chidambaram has to say.
9.4%. The Economic Survey has stated that the deflator for manufacturing has been assumed as 1.7%. Roughly half of the WPI inflation. The deflators assumed by the government have been severely criticized by several knowledgeable economists. Unless the puzzle of the deflator is resolved, it is not possible to unquestionably accept the claimed GDP growth of 8.2% in 2023-24. Besides, the GDP growth rate is no answer to the huge challenge of inflation. The Economic Survey dismissed the issue of inflation in a few short sentences. The FM dismissed it in 10 words. The Finance Ministers dismissed inflation in 10 words in paragraph 3 of our speech. We deplore the casual attitude of the government, and nothing in the budget speech gives us the confidence that the government will seriously tackle the issue of inflation. Education is widespread but of poor quality. Nearly one half of the children are unable to read or write a simple text in any language and are numerically challenged. They are not fit for any skilled job. The central government must drive and help the states address these fundamental problems. The other issue concerning education is NEET and the scandal-ridden National Testing Agency. Several states have demanded that NEET should be scrapped and the states should be free to adopt their own methods.
That's former Finance Minister P. Chidambaram there taking his pot shots at the budget 2024, 7th budget presented by Nirmala Sitharaman. Let's now take this across to Nilesh Shah, who continues to be with us. Nilesh, Finance Minister Nirmala Sitharaman has proposed to cut basic customs duty or BCD on gold and silver from 10% to 6%, which is likely to lead to a decline in domestic prices of gold and silver and push the demand for precious metals in the country. It will also reduce the risk of smuggling of gold as well. This should ideally be a positive catalyst for the yellow metal. I want your thoughts on the matter.
The decrease in import duty on gold is a step in right direction. Higher import duty was resulting into gold smuggling, and assuming that gold smugglers are not charitable organization, based on the gold seized at customs over last 3 years, the net run rate of gold smuggling would be between $7 to $10 billion a year. That's significantly large revenue leakage, and it is law and order problem. Reduction in import duty will hopefully reduce gold smuggling to a great extent. But at the same time, we must focus on recycling of gold. We are the largest owner of gold and silver in the world. Yet every year we import 700 tons of gold. We pay top dollar for it. In 22 years between official and non-official channel, we have remitted close to $500 billion for import of gold. It is more than the foreign direct investment we have received. It is more than the foreign portfolio investment we have received. This much money, if it had remained within India, would have created unbelievable growth and unbelievable GDP expansion. We are like a patient who wants to improve his health. Doctor prescribe blood transfusion. Go and get some blood. We came to hospital, but instead of blood transfusion, we are standing in the queue of blood donation. We are giving our money out for import of gold and putting that gold in Tijori. The economy does not benefit. Along with reduction in import duty of gold, we must put focus on recycling our existing holding of gold so that every year we don't send top dollars for import of 700 tons of gold.
All right, a shot in the arm as far as gold is concerned. Andrew, what does that do to investment in the stock markets? If the gold becomes cheaper in the domestic market, how do you see that having an impact? And I want your thoughts on this, slash down of the basic customs duty on precious metals like gold and silver.
It's a different asset class, right? So you have to kind of look at it in that respect. Do you want to be in equity, or do you want to be, some of your portion of your money in gold, or do you play it through the stocks which, would benefit from this, like a Titan, for example. So I think that's the call you have to make. I wouldn't necessarily rush to kind of change all my investments from equity into gold. In that respect, but you could play it through the markets, I think, quite well without having to shift your asset allocation. So it depends on your asset allocation, to be honest.
All right, depends on your asset allocation. I'm not sure if Riaz is still with us. Riaz is with us. Riaz, thank you for patiently waiting all this while. One of the asks or provisioning of the budget, of course, is to incentivize the employers to ensure that employees are either retained or hired in greater number. And of course, unemployment continues to be a cause of concern in the country. Even though tax filers are increasing, the number of nil tax filers is obviously higher than those actually filing taxes. Are you happy with kind of measures the budget, not just this budget, but the previous budget has done on expanding the tax net, getting more people employed and making sure more number of people are paying taxes?
So I think the first part of the question, I don't think is the tax question. When we are talking about creating employment, I think the allocations within the union budget have been significant in terms of creating employment opportunities, and that is being incentivized both in terms of cash payouts and also in terms of certain tax measures which encourage, like APJJA, which encourage employment of people for tax breaks. So employment is being taken care of. As far as increasing the tax base is concerned, there are two issues to it. One is actually the number of people who are either without jobs or lower income levels, but also the question of compliance is a very, very significant problem. And I think that has been addressed quite well over the last few years. And I think more and more compliance is coming in, of course, largely because of a lot of data availability within the government domain, and that is heading towards more inclusion. One thing I would, however, point out that while we are talking about more and more compliance and more people filing tax returns, the actual significant part of the population is earning very low amounts, which would anyway be below the tax level. And while compliance can help those who do not, tax filing can help covering those people who are non-compliant by not declaring their income, I think we still have a long way to go in terms of raising the actual employment levels to create the income in the hands of the people.
Now get in some corporate reactions to Budget 2024. Let's listen to what Sangeeta Reddy of Apollo Hospitals had to say.
So I think there has been a continued thrust in healthcare. There is a good allocation of healthcare. We, of course, have always looked for more, but I think the 3 cancer drugs have been announced from tax exemption. The flat tube, tax exemption is a signaling that manufacturing of healthcare products in India is important to reduce the input cost. I also think that the skilling, the employment generation for youth, all these will be enhancements. And APCO, we also have to remember that last time there was an insurance cover for people over 70 years of age. So in combination, healthcare has been touched. Let's look forward to the next budget for more on healthcare. But the fact that the economy will continue to grow, this is a comprehensive budget, still makes me say that this is overall a good budget. Thank you.
Right. So the budget has been largely positive for healthcare. That is what Sangeeta Reddy had to say. Let's also quickly listen into CII President Sanjeev Puri on what this budget entails for not just industries but also for people. Listen in.
It's a commendable budget, very good budget. It has very clearly focused on investments for inclusive growth, very clearly dealt with the issues of the climate emergency, and at the same time not only adhered to but gone ahead of the fiscal glide path, which is a positive. So a commendable budget indeed. Resourcing being allocated in the economy for agriculture, for skilling, for MSME, for youth, for infrastructure, for innovation, for energy transition. So many areas, a lot of resource allocation. And so that's why I'm saying it's indeed a very commendable budget, and all of this being done with a 4.9% fiscal glide path is commendable.
All right, let's now get in an overall take on the budget from Nilesh Shah, who continues with us. Nilesh, talk to us your assessment, overall assessment of budget 2024, and what according to you were the big hits and the big misses?
The biggest thing in this budget is that it is laying the foundation for a Viksit Bharat. It achieves trinity of impossible. One side, it pursues the path of fiscal prudence. When we presented the budget last year, our estimated fiscal deficit to GDP was 5.8%. This year, we are putting the number at 4.9%. Almost 90 basis point fiscal consolidation is a big thing for the foundation of Viksit Bharat. We will become primary surplus country over next couple of years if we maintain this trend. Second, this budget is allocating resources for investment. Railways, road, defense, power, and water. These are the priorities area for the government. Third, this budget is focusing on employment generation. It is probably going to support sustenance of growth in rural and bottom end of the pyramid. This trinity of impossible, fiscal prudence, infrastructure investment, and employment generation is a foundation for Viksit Bharat. That's the biggest opportunity out of the budget. What it could have done better? Well, it could have gone further on improving ease of doing business and investment. But it's a continuous process. It can be pursued outside of the budget also. So overall, very delighted with the budget. As I mentioned earlier, this is a step in the right direction to lay the foundation for Viksit Bharat.
All right, Riaz, I'm going to bring that to you as well. Simple question to you: on a scale of 1 to 10, how would you rate this budget? Where would you rate this budget, and why?
That's a bit of a hot spot, but I will divide it into two parts. On the allocation part, in terms of expenditure, I think it's well directed. Given the economic survey and the conservative estimates on the economic survey, the downward trend of foreign direct investment, high level of unemployment, I think focus areas of allocation towards inclusion, infrastructure, agriculture, employment generation, etc., I think that is done extremely well. In terms of tax measures, it's a bit of a big mixed bag. I did say that on one hand, removal of angel tax is a very, very welcome decision. It will help, startups to raise money at the right valuations. It will definitely be a boost for increased funding of startups. And I think that has been a long-term ask, and I think that has been worked well. On buyback tax, there is a a bit of a mixed bag, because while it has rightly moved to tax in the hands of the recipient, what it has also done is it will be taxed as dividend, and therefore the effective tax rate will go up from 20% to 30%, and the cost of acquisition will be treated as a capital loss. I think that is going to create a bit of a hardship in terms of buyback tax. On capital gains, I have already mentioned that by and large it's okay, except for old property, ancestral property, where the removal of indexation can create a significant problem for individuals. One area which is a little, I have been particularly surprised, there's been the removal of equalization levy. And, equalization levy has to be read along with the BEPS Pillar 2. And it's a bit surprising because BEPS Pillar 1, sorry, and BEPS Pillar 1 is, implementation is not happening in a hurry. So okay. I was surprised at the removal.
But fair enough. Just one last thing. Tell us your rating on a scale of 1 to 10.
So I would say 8.
Okay, 8. That's a very high rating. I'm afraid we've completely run out of time here on the show with that as well. 8 on 10, Shweta, is the rate coming in from Riaz. So we're still, understanding where the growth trajectory is going to come from, and what we understand at this stage is that this budget is sort of laying the foundation for our growth trajectory.
Absolutely, budget laying the foundation there. But let's also hear some of the opposition voices. P. Chitambram was speaking for a very long time. He talked about the unemployment rate, which he's saying is at 9.2%. Government says it's at 3.2%. So quite a variation there from what opposition is saying and what the government is saying. He's also talked about how 8.2% GDP in the year gone by doesn't look plausible. I'm not sure what he's challenging here. He talks about food inflation, which remember has been on the upside at about 9.4%. He talks about NEET, which has no bearing on budget whatsoever. But then he also talks about public healthcare infrastructure, valid point there on the grave shortage of doctors and nurses and hospitals. Remember, there is some allocation to building more hospitals and building more schools as well, which he has also referred to. So, a lot of conversation there, of course, from the opposition, asking a lot of questions. Now, this is what a robust democracy is all about. It's about voices that talk about what benefits the country, but it's also about voices that question those in power, and we continue to do that here on Newsline Live. Gentlemen, all of you, thank you very much for taking time out. Thank you for joining us on this very special show on Budget 2024.